Well, good evening, all. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for Thursday, the 14th of March, 2024. We're getting on to 6:30 p.m. Central Time. All right, finally, a little bit of a correction. Not a big one, a little bit, but could turn into something bigger. Why? Before I go into anything, let's take a look at what we have tomorrow. Triple witching day. Now, what's the most volatile time of a triple witching day? Traditionally, it's that last hour of trading whenever the options are going to start expiring on you. You want to look at that, your option expiration time, and futures, the March, go off the board tomorrow. So the roll has already occurred for most retail traders, but there's plenty of people still trading in those March contracts, so you got to pay attention. At 7:30, you get the New York State Empire Manufacturing. You get the import-export price data at 7:30. 8:15, we get the Federal Reserve Monthly Industrial Production and Capacity Utilization. And at 9 o'clock, we get the preliminary March Consumer Sentiment Index. Those are all going to be important numbers. Now, as I said, we had a correction today. Late in the day, if you were watching the last hour of trading, you had made new lows, and then the market started turning around, and it recovered about half of what it had lost. Tonight, we're dropping back a little bit, and the question is, does it stay down? You know what each break has done better than me. Each break has been met by buyers stepping in, looking to gobble things up, as they're not worried when the Fed is going to cut or not cut. Why? Because the earnings of companies have been so strong that the valuations change and it's offering support, and people are viewing that as the buying opportunity on the breaks. Giving you the nutshell of what it's doing. When we take a look at the energies, they have been on a tear to the upside. That's the only word I can use. I think breaks in them are buying opportunities. Natural gas, I can tell you that I had been having my clients shorten this morning. I had them cover their shorts in my morning update and call it a day, and it was a good trade overall, so I'm happy with that. Not every trade's always a good trade. As you can see, you want to be trading in the June currencies. I made the move yesterday, and today I made the move for tomorrow morning for all my subscribers. So I'm formally into the Junes of basically the currency markets, the bond markets, the note markets, the stock indices. That's where I think you want to be. Now, when we take a look at the S&P on a weekly basis, all right, you're still up. And by the way, on a close-only basis, I know it doesn't feel like it, you're up 0.37% on a weekly basis. All right, that's still pretty darn good. When we take a look at the market through here and we put the swing line on, the swing line is so important because it clears up what this chart would look like. Where's the break lows and the rally highs? Well, when I do that, higher lows. Now the question is, are you double topping up here? And you could be. If the market takes out 51, 57, you break this pattern of higher lows, higher highs in the market. The support would then come in the 51.78 level. Well, let's talk about that. I just said if you took out 51, 57, in order to get there, you got to get through the 18-day average. That is the likely spot, the first support zone that I would see in the market before that happens. The market, as you can see, is fighting against the Bollinger Band. Every time it's hit it recently, it has backed off. This is an outside day. Today, Thursday, to the downside. This is Friday's action. If you take that out, the odds favor you'll go to the Bollinger Band again. Doesn't mean it has to. It's what the probability is. Not taking it out could be a sign finally that the market wants to give up a bit more ground and get towards that 18-day average of closes. Momentum-wise, remember I said the odds didn't favor that you would get an embedded reading? Well, you didn't, all right? Just take a look at all that's taken place here. You had a shot to do it. You had 2 days in a row where you had the 80 readings, and it failed to do it. So you're back into an overbought market that has bullish bias. The swing line trend is up, but it's got to work out of an overbought condition. How it does that, it either embeds or it corrects further. Sideways action would do that as well, by the way. When you look at the Nasdaq, the trend is now down tonight. lower highs, lower low, and momentum pointing down. You'd have to get back over here, the 18,507 level, in order to say, nah, that's not true, Ira. Barring that, do you have to go down to the Bollinger Band? You don't have to do anything. You could end up with your battleground, the 18-day average, but you're not in an uptrend in terms of chart parlance at this point. When we look at the Dow, another huge outside day. Take a look at the action. I'll show it to you right here. So the market went up, failed, didn't quite make it to the upper Bollinger Band, missed it by that much. And now your battleground, very clearly the 18-day average. Are you trending? No. You have a higher high, lower low pattern. Momentum's gone flat on you. And in the Russell, as much as people rushed to buy the market, and I mentioned to you, I said, everybody I'm seeing on TV is saying, hey, you want to look at the Russell, these low-price stocks you've never seen that have PEs of 10 or 15, and they're buying them. Well, I'm not saying they all went down. I'm saying the index has turned into a bear trend again, and the probability of generally, this is the first one on downside to try to reach for those Bollinger Bands. We'll see if it tries to do it or not. Then we get to the interest rate futures, which this week peaked out right against, again, my good friend, that Bollinger Band. You're not in a trend. You have a vertical decline. You have a higher high and a lower low. The market has been shook by two reports, the CPI and the PPI, and now it's going to wait to see what the Fed says in their meeting. But my own thought is you can turn off the volume on your TV. Look at the dot plot and you'll have an idea what the reaction should be. In the 5-year notes, if the market wants to extend, they're already oversold. You could be looking back at the 18-day average of closes. In the dollar index, just in the past 48 hours, I've mentioned to you a couple of times as the market was climbing here, said it's an oversold market. If it wants to rally, I'll be looking to see what the market looks like as it approaches the 18 and the 100-day average. And are we going to get a bearish crossover? So here's the market tonight where you're at. This is today. We haven't opened yet tonight, but you can see that resistance point is right above the market. Tomorrow's going to be a super interesting day in that market. And look at the failure that you had. We were talking yesterday. Let's get to where we were. How the market was trying to find support at the 200-day average to the Bollinger Band. I teach in my charting course, and the charting course, by the way, the new one that I've done, today we recorded my intro where I'm on camera, the exit. I have one final chapter to do, and then I'm putting some notes so you can link to different things on websites and so on. We're basically done. So let's applaud that. You'll hear about that from me next week. But looking at this market, as I'm looking at what it's doing here, so that gave ground. So the next support is right here. 109.15, you can see how the combination of the 100-day average and the 18, I didn't say it's a buy. It's the support level. Right now, the trend is down. The bias is up. The market's got to prove itself, in my words, at that number, and that's where you're at. British pound also giving things up because why? Because the market got shook by the strength in the US dollar over the CPI and the PPI report. Bitcoin even gave up something. That's a surprise. But as long as it stays embedded, I still say the pros are buying this market. Today it got hit pretty good. If we take a look, and it is super volatile. Let's see if it doesn't want to let me do that. All right, there we go. Let me come back to it. It might now do it. Yeah, there you go. Sometimes it gets stuck. You were down $4,300, 5.8%. You're making up a good chunk of that tonight, better than half of it. Will it hold that? That's going to be the big question. But what do I teach? Until the red line's under 79, the market has still got the bullish bias. When we look at Brent versus WTI, is it going to come back here and challenge the 461 levels, what I'm looking at? We're overdone and over the upper Bollinger Band and overbought. I am not bearish. I am looking how to get long these markets on the pullback. That's what I'm looking at, especially the gasoline, where I told you I think there's a huge move coming in gasoline. I think you could be surprised how big it could be as the spring, summer comes on. You are overbought, but that's the first step of embedding. You have now 2 days in a row over the upper band. You're going to try to probably get back under it tomorrow. That would be the hope. And the question is, what do you do? I'm not going to change what I told you here. I think that the pros are putting on option strategies to the bull side, but not doing it in the May contract, further back to take advantage of the spring, summer. And in nat gas today, when the market fell down here, I put out my update and I told clients, I said, we may not make it to that Bollinger Band. Don't turn a profit into a loss on the remaining contracts you had, because we had been bearish right over here. And I'm happy to be gone temporarily. So I'm a happy camper today. And to make you happy, I want to talk about what we've got right here. This is our futures trading kit. And there's so much in here. All the courses from the Chicago Mercantile Exchange we link to. Then you're going to get the chapters that teach you how to get started with trading. We do a lot of crypto in this, by the way. So there's a lot to be covered. There's tools for, I think, every level of a beginner trader or a person that wants to get involved in charting. The cause and effect is something I created to teach you about the velocity of M1, M2, and M3 money supply. How does it work through everything? We include our pivot point series. 3 chapters that teach you how to work with them. You probably have them on your charting service. Different chart patterns that you can download. You can put them into your phone. You can keep them on your desktop. You can print them out. And as I said, all the Merc courses, but a lot to do with the cryptocurrency, since so many of you are interested in that. Everything is included right here. So how do you get this course? It's simple. You go to iraepstein.com under free offers, or you move your cursor right up here and you take advantage of it that way. I'm Ira. You have yourself a good day, and I will talk to you all tomorrow.